So today, um, we're still going to talk about trading bias, directional bias, which is something I talked about in my previous video. If you've not watched that video, you could just check um, my previous video to understand because we are going to be building on what we discussed in the last video. We're going to build in more. We're going to be going into more details in this video, and in this video I'm going to be focusing on the different types of trading biases. Now, when I started trading, we were told that for you to understand the trend, you should zoom in and you know draw a trend line, probably from the higher high, connecting connecting to higher highs and all of that. We're told to do all of that, but then that knowledge of trend actually um, affected me. You know, it's it's something you learn in Forex 101. Understanding trend. They tell you the trend is your friend and whatever, but nobody actually tells you. Nobody actually explains to you in detail how to find the trend. Okay, nobody actually explains to you in detail how to monitor the trend. Now, you do not need to zoom in. You don't need all of this to draw a trend line or to use an indicator or to do whatever you want to do or to use a channel to understand the trend. Okay, like I said in my previous video, that if you want to find the direction, okay, what you want to find is the direction. You want to be able to understand the direction for that day. Okay, so today what we're going to be focusing on is the types of directional bias. Okay, now there are two types of directional bias, primarily two types of directional bias, which you should really concern yourself about, and you should make it a priority to understand how these two types of directional biases function. I'm going to tell you for free that after understanding directional bias, trust me, need you don't need any fancy strategy. Okay, you don't need you don't need even without a strategy, you can just enter the market and be more profitable than anyone who doesn't understand directional bias. Directional bias tells you that you should not be buying in a selling market and you should not be selling in a buying market. Now, like I said, there are two types of directional biases. The first type is the continuation bias, and the second type is the reversal bias. These are two types of directional biases. There is actually a third, but you shouldn't really concern yourself with that. You should mainly focus on these two because the third can make it seem a little more complicated. We'll talk about that in another video, probably. Okay, so I'm just going to focus this video today on these two types of directional biases, which is reversal directional bias and continuation directional bias. Now, in the continuation directional bias, you often see it in a trending market. Okay, for instance, if we look around here, you can see price printing these red bearish candles consistently day after day. Mind you, this is the daily chart on the BTC USD. Alright, so you can see price continuously printing these bearish candles, okay, day after day. Alright, now for you to trade for you to get in on this trade or on this market, you have to find the continuation buyers. If not, you're just going to be buying in this selling market. Okay, you're going to be buying in this selling market. This is another example. This is a buying market. You could call it a bull run because you can see price buying for almost a week. Okay, almost 1 week. You can see price continuously buying. All right. So if you do not understand continuation bias, you probably might start selling somewhere around here. Trying to catch highs, trying to catch the sales. Probably you might have you might think that this is an order block. Let me just mark it. Sorry, I'm not used to making videos on my mobile trading view, but I decided to just go with the simple stuff this year. So pardon me if I'm not really illustrating properly. So you probably might decide to sell on this order block. And you might see this as maybe an inducement. This candle, this red candle here, you might see that as an inducement or whatever, and say, okay, good, time to sell. And what happens? Boom, you're taken out. Price continues printing. So I'm trying to make you understand. That directional bias is everything. Okay, any other thing you're doing in the market without understanding directional bias, if you're winning by chance, you're winning by luck, and you do not want to bank on luck in 2026. All right, take a minute to um, um, take that in. You do not want to bank on luck in 2026. You want to understand what you're doing. Okay, because if you don't understand directional bias, sometimes you just come to the market and you just looking in random areas. You don't know exactly what you're looking for. So you need to be able to tell exactly what you're looking for. With me. Alright, so let us understand how to find continuation directional bias. Now, a continuation directional bias exists it can be found in an existing trend. Okay, price continuation, like the name says, price continuing. So if price is bullish, then the next day continues bullish, or the next week continues bullish. All right, like I said, we either use the daily time frame, or the weekly time frame, or the monthly time frame to find directional bias. But if this is your first time trading, I'm just going to advise you to stick with the daily time frame. It's much easier as a day trader to just focus on trading directional bias to the daily time frame. Less headache. All right, less headache. So let us let's use this bullish move that happened for almost 1 week to explain continuation directional bias. Now, previously, the bullish move started on the Friday. On Friday, February, Friday 26 September. Okay. Now, prior to this bullish move, there was a bearish move. All right. Now, after this bullish move, there was a next move, and the next. All right. Now, the high of this bullish move was mitigated. Okay, so I'm just going to mark that with this stuff skip straight up. So I'm going to mark this high. All right. So this high was what mitigated by this candle. All right. When I mean mitigated, I mean it was broken through. Now the most important thing about continuation directional bias is that once it breaks through, it has to close above. Take note, in continuation directional bias, once the candle breaks above or below the high or the low of the candle, okay, it has to close above the high or low. in this example now, we have this bullish candle and price has what? Broken above the high of the day. This is high of the day. Okay, I'm sure you understand what I mean by high of the day. Okay, this is the highest point in this day. All right, so price has mitigated, it has broken above and it has closed above. Now remember my last video, I said if you want to find the bias for a previous day of a day rather, you check the previous 2 days. Okay, now once this price here has closed above, what does it signify? It signifies that the buyers are strong in the market. Okay, it signifies that what? The buyers are strong in the market, which means there's a potential for a continuation upwards. Continuation directional bias. Once this price has closed above, there is a what? Potential for a continuation upwards. Let's look at this other example here. Alright, so you can see this candle and price came and broke below, mitigated this low and closed. So let's mark it now. Alright, so we just marked that low and price mitigated it and closed below. Okay, now once you see this happen, once it's a close below or above a previous day's high or low, it is a sign that there is a possible continuation. Alright, so as you can see, after this happened, we had a retracement to this area. I'm going to talk about points of interest. Okay, the two important points of interest that I consider in my strategy. So that is when I started teaching about strategy, but right now we're just focusing on bias because I'm going to have to stress on bias. I probably might have to do another video on bias after this one because I need you to understand that it is more about bias. You would be more accurate if you understand bias more than strategy. Alright, so once this price closed below sorry, you could see that there was a little retracement to this area and price just continued downwards until this other move happened. Alright, so bias is everything because if you did not follow this, if you did not notice this, you probably might start buying on this day. Because why? You think that we are still on trend. Okay, you think that we are still on trend. As you can see, if you're drawing a trend line, you think that we are still on trend and you'll be probably waiting for a bounce here, but you won't know that price has already given you a bearish continuation, which signals a downward move. Alright, so it's essential that you understand directional bias, not just how to draw trend lines and looking at trends on a larger scale. Okay, looking at trends on a larger scale doesn't work. Drawing trend lines work, yes, but if you understand directional bias, that is the only time it can work. Excuse me. So I'm just going to give you 2 minutes to think about all I've said about continuation of directional bias, because I want to show you something different, which is the reversal directional bias. So pause this video and think about it. Yeah, of course you didn't pause the video. Of course, you are very impatient. Like my mentor will always say, you're very impatient. Okay, so let us look at reversal continuation bias. What signals reversal? What makes you feel like there is about to be reversal in the market? Like I always tell people, We are all speculators in this market. There is nothing that is offsetting, but you can increase your chances of foretelling what can happen. There are telltale signs of what is about to happen. There are always footprints of what is about to happen in the market. The candlestick tells you everything. You don't need any indicator per se. Okay, you don't need any extra thing. Okay, the candlestick is the footprint that tells you everything you want to know. Okay, now what is that indicator? What do you see in the candlestick print that tells you that a reversal is about to happen? That is where the reversal directional bias comes in. So I'm just gonna delete this so that we can actually see. So let us continue from here. We understood that price continued going upwards. Okay, so I'm going to show you what a reversal directional bias looks like. Now, a reversal directional bias occurs when price, listen, where price mitigates a previous day or low, okay, a previous day's high or low, and does what? And rejects. Okay, price mitigates a previous day's high or low and does what? And rejects. Alright, so let's look at this example. Like I said, price continued moving upwards. Okay, then look at here. Okay, now this day, which was the Monday 29th, price closed bullish. The next day, which was a Tuesday 30th, price mitigated the high and did what? And rejected and closed below that high. Now, once you see this, it is a sign. Listen, it is not a rejection. It is not it's not a reversal. It is a sign that there is a possible reversal about to happen. Okay? It is what? A sign that is a possible reversal about to happen. Okay? Now all of this falls down within the time a certain time. Okay, we're also going to talk about time, the role time plays in all of this. Okay, so but let's not complicate the issue. All right, this is a telltale sign that what? That there's a possible reversal about to happen, and most times it doesn't happen. Okay, it's just that it's a sign. So once you see that kind of telltale sign, you begin to watch out. Okay, you begin to watch out at the reaction of price in the next day. I'm going to talk about all of that, so let's just take it slowly. So let's look for another example somewhere around here. You see what happened here? Price mitigated this high. Price mitigated this high and did what? And closed below it. A telltale sign of reversal. Okay, now it's not a reversal. The next day's candle tells us what exactly is going to happen. Alright, now let's look at another example that actually happened, another reversal that actually happened. Now notice this. What do you see here? You see price was bullish on this day, and on the next day, which was Monday 6th October, price mitigated the high and closed below. And what next did we see? Boom, 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 to the downside. Okay, these are telltale signs. If you look around price, you'll mostly see some of these things happen. You mostly see this thing happen, where price mitigates a high or a low. Excuse me. Where price mitigates a high or a low and reverses. Just take a moment, take a break, and just look around the chart and notice what you see. All right. So you can see the same thing happen here. You can see the same thing happen here. Price mitigates that high, flushes down. You can see the same thing happening here. Price mitigates the high, flushes down. Let's look at it in the opposite direction. Okay, you can see the same thing happen here. Price mitigates that high, flushes down. You can see the same thing happen here. Price mitigates this low, flushes up. Same thing here. Sorry. Same thing here. Mitigates the high, goes down. Mitigates this low, goes up. Okay, this stuff just keeps happening. You know, it's everywhere. You know, it's everywhere. Okay. So, and as we go forward, I'm going to tell you how you can validate these continuations, how you can validate the reversal directional bias. The 2 points of interest that I always consider. I'm also going to talk about my strategy for entry, risk management. I'm going to talk about a lot in this video, just to give you the basis before we start doing a lot of tape readings and a lot of live sessions. I need you to get the basis of everything we're talking about on this channel. Okay, so your assignment for today is to go through your charts. Okay, look for continuation patterns that worked, look for continuation patterns that failed. All right, look for continuation patterns that worked, look for continuation patterns that failed. Understand why they failed and why they worked. Look for reversal patterns that worked and reversal patterns that failed. Understand why they worked and why they failed. And I will see you in the next class. I want to put a pattern around my classes. Probably I'll be uploading videos every Wednesdays and Fridays, so that you just know what to expect. If you've not subscribed, please do well to subscribe. Try as much as possible to provide value with the little time that I have. I want more people. My aim is to grow at least 100 traders. It's gonna be a lot. It's gonna be a lot of joy for me if I can grow 100 traders who are consistently profitable in the year 2026. Okay, so subscribe, watch these videos, watch them again, try to understand what I'm talking about here. Go to your chat and just do a little bit of eye training so that you can understand. Don't get too excited. Okay, trust me, I understand how it feels to get excited about things like this, but do not get too excited. Okay, don't get too excited and start jumping into live account or demo or whatever, trying to look for trading opportunities with this little knowledge I've given. Don't get too excited. I know even with this little knowledge I've given can change your trading game, but don't get too excited. Do more of eye practice. Okay, practice more. Okay, practice more. Less analysis, more practice. Okay, thank you. I'll see you in my next video. Bye for now.